The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the worn out, tired tax lady who's got another day and a half before we put this tax season to bed. And if you're out there and you haven't filed or you really need to do an amended return, we want to help you. And for those of you that can't get your stuff together, we can help you with automatic extensions. Again, and of course, I'm joined in studio with Chris Fabian. Hello, Christopher.
Hello, Esther.
Hello. Are you tired?
I think I'm way past that.
Well, I think last Sunday night I became like a deer in the headlights, and I was so worried about getting everything done. I didn't sleep at all that night. I was trying to sleep, and I just worked through the day. But boy, was I tired at 9 o'clock on Monday.
Oh, yes.
But anyway, we're ready to go. If you're somebody that has a tax question, 803-0930. 803-0930, star 930 on a cell phone, 716-803-0930 if you want to text us. But basically, right now, you're at a precipice. And either you're going to not file your return, you're going to file your return and you owe money, or you're going to file your return and you got a refund. And that's like one of the three options. That's really about it. And those of you that are multi-years for failure you haven't filed your returns and you got refunds, guess what happens to you in May?
They go away.
You lose your refund.
Yes.
You lose your refund. So if you're somebody that in 2020 haven't filed on, I think it's May 12th, right? Something like that?
May 17th.
May 17th. You lose your refund. So that's a heck of a terrible penalty. For the rest of you that haven't filed yet and you do have a refund, there is no penalty except for the fact that if you wait long enough, you lose your refund. But for those of you that owe money, the penalty for failure to file a return is 5% of the balance due until it gets to 25%. So what you really should do is if you can't get the paperwork in, you could file an automatic extension, and that would give you till October the 15th, but it doesn't extend the time to pay. So that penalty would still be in there. Failure to pay penalty.
Yep. And, I know a lot, but I don't have the money. Well, get the return in, like you said, avoid the penalty. You can go on a payment plan.
Right. And that's a really important thing, the payment plan. You set up the payment plan by using form, what is it, 90-something. You got it here, Chris?
Oh, I just did it.
9465.
There you go.
So if you're somebody that can't pay, you can set up a short-term payment option, and the first 180 days, if you pay that liability, there is no setup fee. Or you can go on a longer-term payment program, and you do that by using Form 9465.
Right. And they'll go out 6 years. And,
But if you're doing 6 years on top of 6 years on top,
right.
It can be.
But the thing is, and if you're making, because they'll tell you, oh, your minimum payment is $200. It's like a credit card.
Right.
It won't go away.
Right.
That's just principle. They will add interest and
Right.
penalties.
Absolutely. Now, for those people that absolutely can't pay because they absolutely have fallen on hard times, that's another thing that we can offer, and that's an offer in compromise. So if you really don't have assets and you really have fallen on hard times and you just did your return and you found out that you owe some more money, then that you can't pay, and you really can't pay it, there is a program with the Internal Revenue Service and the state of New York called an offer in compromise, where you basically have that debt forgiven.
Yep.
or almost forgiven,
Yes.
based
yes.
upon what you can repay.
They will take pennies on the dollar, but you have to prove you can't pay it. No assets, no 401k, IRA.
Because they'll let you rob your money out of your 401k, and if you're somebody that would have had a premature not a premature withdrawal penalty, under 59 and a half penalty, they'll waive that for you. That's one of the exceptions. But right now, you really got to make a decision. And by the way, if you're somebody that doesn't know what to do, all of our offices are open tonight till 9, and we will do automatic extensions for you,
Yes,
which will get you till October the 15th.
correct. Yep.
All right.
Yep.
I'm Esther Gulius, the tax lady from EG Tax, 803-0930, 803-0930, star 930 on a cell phone. You can text us at 716-803-0930. We got a text, right?
We do. Could you address how do I file a 1099 NEC for Amazon Vine? It's for taxable value. No cash was paid to me. I'm not a business.
Well,
Well, I believe cash because I have clients who do that.
right,
That's writing reviews on products.
right.
So you get the products. That means you got paid.
So it's you got cash in kind. In other
Yep.
words, they gave you a TV that was worth $200, and so when you got the asset, that's the same as cash.
Correct. Yes.
So what you would do is you have to put that on. NEC means non-employee compensation. So you'd put that on a Schedule C, and you can reduce it by shipping, for instance, if they charge you for shipping.
Yep. Your internet,
Right.
things like that you use. If, so, but yeah.
And and here's the thing. As the IRS gets more and more sophisticated with all the electronics, you're going to find out that some of the things that maybe you thought you didn't have to report, you do have to report because it's been given to the IRS at the same time. Not that it wasn't taxable at that time, but a lot of people let it slip their mind, so to speak.
Right. I mean, I had somebody today, they got a 1099 miss for a lawsuit that they won. And they're like, well, I don't have to report that. The letter from my lawyer says it may not be taxable, so you don't have to put it on the return. I said, yes, I do. They go, they won't catch it. I said, yes, you got it.
And they did.
mean they got it too. So if you don't report it in 2 years from now, you will get a bill for penalties and interest.
Right.
Oh, okay.
That's right. You see, you got to, but now there are times when lawsuit settlements that you get are tax-free. If it's for pain and suffering due to physical injury, that is pain, that is tax-free. But if you're getting a 1099, beware that the IRS got it as well.
Correct. Yes.
And they don't send it because it isn't taxable. Now, if you do think it's wrong, you go back to the issuer and say, I thought this was for me breaking my leg. Oh, but when we really came down to negotiating, we decided to do lost wages.
Yep.
And lost wages would be taxable. All right, let's go to Darlene. Hey, Darlene, how can we help you?
So what happened is I lost my phone, so I lost all my information. So when I went to file my taxes through online, I don't have my adjustable gross income number and my PIN. So how would I file online?
You mean you don't have it for last year?
Right.
Correct.
So do you remember your username and password?
Do you remember your new username and password? No. Because that was all, you know how you set that up on your phone, it immediately comes up.
And you don't use the same username and password for many other
For
things?
everything? No.
I would tell you if she comes into our office, we don't need the information for the previous year. We can file without it.
Wonderful. Thank you so much.
Okay, thank you. I'm Esther Gulius, the tax lady from EG Tax. Excuse me. 8030930, 8030930, star 930 on a cell phone. Text us at 716-8030930. We're going to take a short break and be back on the other side with your calls. Hey, we are family. I'm Esther Gulius, the tax lady from EG Tax, and we want to help you. For those of you that are happy that it's almost April the 15th, so are we. And for those of you that are just saying, oh my gosh, I don't want to get it together, and you're at that juncture of saying, are we going to try to pull it together? We can help. By the way, you can come into any one of our branch offices and we will do the automatic extension for you. For those of you that want to do it on your own, it's a 4868 and an IT 370. But remember, it only extends the time to get the tax return in. It doesn't extend the time to pay the taxes, so you would still be taxed on failure to pay penalties.
Right.
And interest. Right?
Yep.
All right. I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on the cell phone. We got to talk about these letters that people are getting. And if you're somebody that's gotten a letter, you know how frustrating it is from the IRS.
It's scary.
It
I mean,
is.
I had somebody, I thought you guys help with audits, and I called, and they said you can't help me. I said, wasn't an ID PIN? Did you have to verify yourself? No. I said, are you sure? Yes, it was an audit. I'm like, well, what did they audit you for? Well, I had to go back to a couple of years and tell them a line number and do that. I said, that was the ID verification letter that 2.5 million people got last year. So that wasn't an audit. It was to prove your return was true and accurate. Oh, but that is a big letter that they're even mailing out again this year.
They are. And if you got that letter, and especially if you can't upload your ID because you don't know how, we will help you. We cannot talk to them because they will terminate the conversation, but we can at least be there for you when you do that authorization. And I will tell you, I've had clients that still don't have their tax refund from like 2022.
Yeah.
And some from 2021, and they've sent in the information, and they've done it all. But it's so frustrating, and so we would sure like to help you, and we don't charge to interface with the IRS.
No.
Right? Okay, I'm Esther Gulius, the tax lady, 8030930, 8030930, star 930 on a cell phone, and we're going to go to Tim in West Seneca. Hi, Tim. How can we help you?
Hi, Esther. I have a question. It's concerning the new healthcare workers' hygiene bonus.
Oh, yeah, for New York State.
Yeah, it shows on the W-2 as a line 14,
Right. Mm-hmm.
and it says that if this has been added to your income, you can take this amount off.
On New York State, right.
So I wasn't sure where to do that.
All right, so you go to page 2 of the IT 201 under subtractions, and you go down to the section that goes to the 225, and then you go to the worksheet, and there is a place on there it says for where all these subtractions are, the subtraction for healthcare workers, and you deduct whatever figure is there. I've seen it as high as $3,000 and as low as $500. And so you take it off of New York State there under subtractions.
And does it say healthcare workers, or do you just put it in?
It's line number 243 on the 225.
Oh, line 243.
Okay?
Great.
Well, that'll save you a little money.
Right.
All right, thanks for
so much.
calling, Tim. All right. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. And we got somebody from sunny Florida calling. Hi, Joe. How can we help you?
Yes. I bought a property about 10 years ago, and I used it as a vacation property, never rented. Is that taxable? And I sold it in 2023. Is that taxable federal or New York State? I'm a permanent New York State resident.
It's taxable on both. Whenever you're a resident of a state that has state income taxes, then all income earned in while you are a resident is taxable unless it's specifically exempt.
All right. That's long-term capital gains.
But in New York State, they give you no benefit for a long-term capital gain. Only the federal does.
So if my tax rate in New York is 15%,
No, it's not that high. No, it's not that high.
New York's tax rate only goes up to 11%.
Only.
So if I sold it for $100,000 more, I'm going to have to pay, let's just say 10%, $10,000 New York State tax.
That's correct.
Very good. Thank you so much.
All right. Thank you. Enjoy Florida.
Thank you.
I'm Esther Galicia, tax lady from EG Tax, 8030930, 8030930, star 930 on his cell phone. Mr. Chris.
I was going to say, it's great. It's in Florida. Yay, him. But if it was in Georgia and he would have had to pay the tax to Georgia and then get a credit on the New York. Right. But since there is no tax in Florida, there's no credit to offset. I know, but there's no credit to offset.
Right, that's true.
The New York tax.
So I did one the other day that a gentleman was a New York resident, worked in Massachusetts and in Vermont, and that's where he had withholding. So I had to do a 112R for 2 states in order for him to get credit for the taxes paid to Massachusetts on Vermont on his New York return.
Right.
And that happens a lot.
Yes.
Right? All right. Things I wanted to make sure, and let's see. We have. That's not a new text.
Current text.
All right. Let's talk to Steve. Hey, Steve. How can we help you, sir?
Hi, Esther. I have a question about employing children. My wife runs a digital media marketing business where she posts content on Facebook, Instagram with our children in it, and I'm curious what kind of write-ups I can have if I employ my children. Thank you.
Well, how old are your children?
6 years old and 4 years old.
So I believe there is some Social Security and Medicare.
Right. Social Security and Medicare won't tax a child who's working for a parent. The thing that I would question is, everything in order for it to be deductible has to be ordinary and necessary. I don't think it's ordinary and necessary that a 4 and a 6-year-old are used, but the nature of your wife's business?
She's
sells like healthy, clean beauty products online. So the children will be posing with the products.
All right, so they're okay.
Products.
So they'd end up doing a Schedule C.
Or if it's on a W-2.
Or if you pay them on a W-2, you don't have to do the FICA. And then that becomes a subtraction against her income. And then it becomes income to the children. Bear in mind that if you pay them more than $3,500 on New York State, it's around $3,500, they're going to pay New York State taxes.
Okay, thank you.
All right, thank you. All right, I'm Esther Galicia, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. Looking ahead, all right, so those of you that got your tax return, you're happy as clams, you're driving around on a Saturday, going to church or whatever, looking ahead, if you're somebody, I just had a client today, there's a 401k at her job, and she's not in the plan. And there's an employer match, and that's so sad because if you get into the pension plan at work, 401k, and there's a match, that's like, and you aren't in, it's like throwing money away.
Right, yep.
Okay,
So,
you have something?
No, I'm still reading
okay.
it. So.
The other thing is the Trump tax cuts expire this year. Now, we will keep you abreast on what happens, but those tax cuts that increase the standard deduction so much and did the QBI and all that kind of stuff, they're gonna go away. So we aren't sure what they're going to be doing, but as soon as we know what Congress does, we'll let everybody know on listening to WBEN. The other thing is if you need doors, windows, furnace, hot water tank, high efficiency air conditioning, high efficiency windows and doors, that credit for energy is something that you ought to plan in. And since the maximum credit is $1,200, you want to make sure that you utilize that in the best way you can. In other words, don't do $20,000 worth of windows in 1 year. You're only going to get a $600 credit for it. Rather do a window, a door, an air conditioner, so that you can use that $1,200 credit year after year after year and have the federal government kind of partner with you. So that's another thing. Yeah.
Yes, I've told people, just get a couple windows this year, a couple next year.
Right.
And they're like, well, what if the price goes up? I said, well, it's a chance you got to take, but at least you'll get another 600.
Right. And it does. It adds up. And of course, biomass stoves and solar units and all that kind of stuff. That also is something that's even larger than the 30% limited by $600 that the Clean Energy Conservation will help you with. Other things that you should look at is, remember, if you have a 16-year-old child that's going to turn 17 this year, what happens?
Oh, that $2,000 credit becomes $500 credit.
Right, and so your tax bill will go up $1,500 next year. If you, I had a client. The reason this was fresh in my mind is I had a couple with a set of twins that are both 16, and I said, "Oh my gosh, your tax bill's going to go up $3,000 next year." And they said, "That's the most expensive time I could have a child is when they're 17." Oh well. So, but the next thing after that would be their education credit. So then that turns out to be something very good.
Yes.
From a taxpayer standpoint.
But we got to break.
Anyway, okay, well, we're getting close to the news. So I'm Esther Galias, the tax lady from EG Tax, 8030930, star 930 on the cell phone. We'll see you on the other side. Hey, to us, you are family. And I'm Esther Galias, the tax lady from EG Tax. A little pooped, looking forward to putting 2023 to bed. By the way, if you need the best tax help, our offices are open today till 9 o'clock. We'll be open Monday till 9 o'clock. We are closed on Sunday, except for the McKinley Mall.
Correct.
Right?
Yep.
All right, Chris, you have some specific for this for our friend Steve.
Right. So, first of all, it's got to be a sole proprietor or a partnership.
This is Steve with children he wants to
Yep, he
hire.
wanted to pay his children,
Right.
or the wife pay his children. So she's got to file a Schedule C or a 1065. If it's an S Corp or a C Corp paying your children, you're still subject to Social Security and Medicare
because
tax.
a corporation doesn't have children.
Correct. Yep. Second of all, it's got to be a fair wage. It can't be excessive. Then the children are suitable for the work, so you got to file.
Well, they must be cute. He thinks they're cute, right?
But you got to follow guidelines set up by the state for child protection services, for work hours for minors, and they better have their own bank account. And that money's got to go and get
into their bank account.
Their bank account, and you could probably, well, if the push comes to shove, if you take it out of their bank account, what was it spent on?
Right.
So
you can say, my children have to reimburse me for food, right, or housing.
Wow.
But anyway, so that's some of the stipulations. I'm Esther Galias, the tax lady from EG Tax. We have a day and a half, really 2 days before the end of the tax season. EG Tax is there to help. All of our offices are open tonight till 9. On Monday, we'll be open till 9. We will do automatic extensions, 4868s and IT 370s, which will extend your time to mail in the paperwork till October the 15th, but not the time to pay the liability. And I will tell you some of the ways that people might want to look at this, because a 5% per month accumulating penalty on your balance due is a lot of money. And so you might want to take a look at your home equity, right?
Yep.
I mean, if you can write a home equity credit, putting it on a credit card especially if you've got a low interest credit card. Those are things you want to do. I even had a client the other day who said, and they make around $300,000. They said, gee, they think that they don't want to pay the whole $9,000 at once. I said, take it out of your brokerage account. Well, we'd rather set up a payment program. You can. You can set up a payment program, and you would do that by using Form 9465.
Right. And I think, didn't they tell you that they just felt that was too much money to pay?
Too much money to pay at once. Okay. Anyway, I mean, look at nobody likes paying taxes, but that's the way everything got set up. By the way, another thing to think about is once we were talking about kids that turn 17, but once your kid's in college, there's a great big credit that people do incorrectly. I just had a client just before the show that came in, and he brought in his son's return, and he said, "Did I do good?" And he said, because how hard could it be, right? Well, he let his child claim himself, and the kid made $12,000. So was it going to, and the education credit he couldn't take because of his age. So the father lost the education credit. The son didn't get any benefit except for a small benefit on New York State. So we're going to amend the tax return, and the dad is a higher income person, so he's only going to save about $1,000. But $1,000 is pretty good.
Better than the $300
I'd rather save
the kids
$1,000 than nothing.
Right.
Right? So explain the AOTC so people understand it.
Sure. It's the American Opportunity Tax Credit. That's for and it's a college credit for the first 4 years of college.
Or higher education.
Or higher education, a vocational school that qualifies, yes. So you get a dollar for dollar credit for the first $2,000, and then a 25% credit for the next $2,000. So it maxes out at
tuition.
Of tuition paid, not
But
room
not
and
housing.
board, not rent, but just tuition and fees. And so it's a maximum credit of $2,500, with $1,000 of it being refundable.
Right.
So-
And the whole thing is, if you're a parent who has given that deduction that you think to your child did not benefit at all. And amend your return, and you can amend up to the last 3 years. Actually, 2020 is going to close May the 17th, so you want to make sure that you get those, and they will pay you with interest on the extra money. And nobody wants to do an amended return, except if I had $1,000 or $2,000 or $3,000 coming back, that's not small potatoes.
Not at all. No.
Right? I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone.
Well,
yes.
Sorry. What if the parent has 2 other children and they make $50,000? What will the third child also give them a higher earned income credit?
That's right. And those are all things that people don't know when it comes to taxes, that one thing affects another part of the tax return.
Right.
And unless you understand the mechanics of the tax code, you'd think, oh, all I'm going to do is save this, where it might be this and that and something else. And not to mention the state of New York.
Right. Yep.
Right? I wanted to also talk about, if you have a limited liability company, if you have an 1120S or a partnership, we have been talking since January about the beneficial ownership information that has to be submitted to FinCEN in order to avoid a penalty, which is up to right now around $10,000. And that penalty has been moved from $500 a day to $591 a day until it gets to $10,000. And actually, there's if they consider it flagrant that you won't fill out this form and register with BOI FinCEN, they can be up to $200,000 with a jail term. So it's very, very important. And if you need help with that, EG Tax are. This whole summer, we're going to be getting our businesses that have already filled their request out, we will help you to register. So you have to register. All beneficial owners have to register. Even decision makers, even if you're not an owner, if you are considered to be an important decision maker in the company, you should be registered as well. I just read that a little while ago.
It's crazy.
All right. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. How about if you got a great big refund? Is that a really good thing from a financial standpoint?
Yeah, they can share with us.
I don't think so.
No. And it's hard for people to understand. That's your money you could have had throughout the year to help you pay your charge cards, to help you pay for groceries or your kids' education. But giving the government an extra $1,000 a month to get $12,000 refund, how much are you costing yourself?
Right, that's exactly right. Because all you're getting back is your own money. So whenever you're filling out a W-4 form and they're withholding taxes, that money's going off to the federal government or the state of New York, and then you get it back. So, so it's not like, except for maybe the earned income credit, right?
Right.
And maybe the AOTC and the IT 229. Those are credits that you get, and they don't have anything to do with your withholding. But generally speaking, if all you have is withholding and you get back a giant refund, that's not a good way to manage your finances.
No. And for people out there listening, Tiffany will be back next weekend.
Yes.
A lot of people, where's your wife been? Where's your wife been? How come she's not on the radio?
That's
well,
true.
Somebody's got to work and make the money.
Not that you've been sleeping, Chris. All right, let's go back to the phones. We're going to talk to Ramona. Hey, Ramona, how can we help you?
I paid my taxes for 2003, and New York State pretends that they didn't receive the payment, even though my bank says that the check was cashed. What can I do about it?
You have to get a copy of the canceled check, front and back.
I understand that, but they cashed it. What kind of joke are they?
No, but it's not a joke. But what you need to do, Ramona, did they send you a bill?
Yes.
All right. So when you take a picture of that canceled check on both sides, it shows it was cashed by the state of New York, correct?
I understand that, but I sent a payment, and they are sending me a bill pretending.
Well, sometimes,
no, but it's up to you now, Ramona. You have to prove it, and so this is what you need to do.
What do you mean? The bank is telling me that they cashed the check.
Ramona, did you call for us to help you or no?
I cannot call them.
Now listen to me, Ramona. This is what you need to do. Ramona, you need to make a copy front and back.
I understand that. Of course, I will
send
make
it with
the
a
copy.
letter to New York State.
I will make the copy. I have all the documents.
And then make sure you send it certified mail so that you know that they got it, and it should resolve itself.
Sure.
You're not alone in this. This
right.
happens
Ramona,
to a lot
this
of
happens
people
all the time.
for the
and
federal.
Don't be offended. It's not. It's up to you. The burden of proof is to the taxpayer, and this is something you have to do. And once you do this substantiation, you'll be fine.
Yep.
All right. I'm Esther Gilius, the tax lady from EG Tax. We're going to take a short break. We'll be back on the other side with your comments and questions. This is Auntie Esther, your tax lady, and we got about 2.5 days, and Vic closes the books on 2023. If you're in a quandary, you're sitting there with a pile of papers, you don't know what to do, come on in. We'll do the 4868 and the IT 370 and get your automatic extension going. But let's see, we got some text, right, Chris?
We do. If you only receive a pension and Social Security, do you still have to file a 1040?
It all depends.
On a lot.
It does. For instance, if you receive a pension and it was a disability pension, code 3, and you're under the age of 65, then you might get an earned income credit and you'd want to file that return to get the money. But if you have a regular pension, code 7, and you took out no taxes and you're under the minimum filing requirement, then you don't have to file. However, you want to look to New York State. Do I own any property? Did I pay taxes on my house? Then you might qualify for a refund on using the New York 229. So a lot of people don't have to file, but they want to file.
Right. Yes.
And especially that first example I gave on a disability pension code 3, if you have children at home, you'll get a big earned income credit.
Correct. Yep.
So you don't have to, but you might want to.
Yep.
All right, what else we got?
Does a 17-year-old high school student who makes about $11,000 with no taxes withheld need to file? Thank you. We claim her on our taxes.
Good. That's great. And so the standard deduction on New York State is around $3,500. So yes, she's going to owe New York State taxes. She's got to file.
Yes. Yep.
Right?
And she'll owe money if she
and
had no state
she's definitely
withholding.
going to owe money if there was nothing withheld. So, and that's what people don't understand is that if you claim the child as a dependent, the child on the federal has a great big standard deduction. New York State, not so much.
Right. Yep.
So then they're going to owe money. 8030930, 8030930, star 930 on a cell phone. You want to make sure that as you're moving forward here that you avail yourselves of the large savings rates. But a lot of people say to me, oh my gosh, look at the money I owe this year because I got $30,000 in interest. Okay. So they did pay an extra $3,000 in taxes with the state, let's say 4, but they made 20, so they came out $16,000 ahead. Nobody likes paying taxes. But when you make 20 in interest, you pay $4,000 in taxes, you made $16,000. So you have to put it all into perspective.
Right, right. And you tell these people, I'll tell you what, you give me that $20,000, I'll pay the taxes.
Absolutely.
Well, why would I give you $20,000? Well,
That's
you don't
right.
want to pay the taxes, so you don't want
the other thing is people always talk about, I don't want to go into the higher tax bracket. So I just had a client today that said, I want to make sure I don't go in a higher tax bracket. And I said, are you aware that the first layer is 10%? Then everything over that is at 12%. Not all the way from the beginning, but only a 2% increase on the next layer. So he said, really? So this is really important because when you're making your decisions, you have to understand if you ever get to the 35% tax bracket, that's after you've been in the 10, the 12, the 20. I mean, and that those other brackets are encompass that income on that level. It doesn't go all the way to 35%.
Right.
On everything.
Correct.
Right? So, yes, it's great. If you want to take a look at some of the savings banks, make sure this summer that, you've put your money in a high yield, either CD. If you do a CD, you can tie it up for a longer period of time. You don't have to worry about it. But you can do money markets, but then there's no guarantee that they'll keep that rate. Right?
Right.
All right, and the other thing is, I don't know, do you think people understand about QBI?
No, and it's not BOI, it's QBI.
Yeah.
Them and their
It's
initials.
all there. BIs and B.
Yeah.
So that's the qualified business income.
Correct.
Right? So if you have qualified business income, then you get a 20% subtraction over and above your itemized deductions or your standard deduction.
Right. And what you would have to have a business. So not you have a W-2 that doesn't qualify. But say you have a lawn cutting service. And
that
you
makes money.
And they had a net profit of $10,000. You get an extra subtraction of $2,000 from your tax return.
Right.
So it doesn't save you on the self-employment tax, but it saves you on the income tax.
Right. And I will tell you, many of investors are getting it's called a 199A adjustment on your brokerage statement. That is used for QBI. So you want to
Yes.
make sure that if you have your brokerage statement, I had a broker the other day, I had a client the other day had a $3,000 QBI on the brokerage statement. So, that's a great big deduction.
Yep, definitely. So
All right, and if you are doing your taxes today, tomorrow, Sunday, Monday, you can still put money into your IRA, and if it's a traditional IRA, if you qualify, there's parameters like the income isn't too high, and your spouse somebody had wages, but you can still put money into your IRA up to $6,500 if you're single, $7,500 not single if you're under the age of 50. And $7,500 if you're 50 or older, and that can affect a great big change in your tax return. So a husband and wife with no pension plan, regardless of your age, you can be 96 as long as you're working. You can put if you have $15,000 worth of wages, you can put $15,000 away,
yep. So
and that would save you a ton of money. So that's still another thing that you can do for 2020. For 2023, even though we're in 2024. Right?
Yep.
And then the other thing, I hope, if you get letters this summer, please make sure you give EG Tax a call because we want to help you.
We don't hope you get letters. We hope you call us to
Yeah.
help you with the
Yeah,
letters.
the letters are going to come. You're right. You're right. That's true. And that's something we want to help you with. Don't just pay the bill. And if you're not our client, you can still come and we don't charge you to look at it and explain.
Correct.
Right?
Yes.
So if you get letters, like Chris said, you will get letters. And if you get a letter asking for all your identity, is it fraud?
No.
It's not fraud.
No, you have to do it. It will hold up your refund. If you wait till next year, it will hold up your next year's refund too.
And this year, if you're tempted to move your money from a traditional IRA to a Roth, call us before you do it, because once it's done, the die is cast and we can't fix it. So we'd like to be able to tell you how much you're going to pay in taxes by doing that, so that before you make that big decision, you talk to us, because once you give them the money, you can't get it back.
No.
Not if you did an IRA.
You can't.
Right?
You'll have to pay the taxes. Yes.
Yeah, and then the other thing that people ask me all the time is, how much can I give in a gift?
As much as you would like.
Almost.
Well,
You got it. Well, you have to qualify that.
Well, yeah.
What if I'm going to give $20 million?
Well, you can still give $20 million, but
That's true, but you have a gift tax.
you have
return.
to file the gift tax
Right.
return.
But here's the thing: for most people, giving a gift, if it's a gift of $18,000 or less, you don't have to do a gift tax return. So a husband and wife
Hello.
could pay $36,000 to child A,
I'll be right back.
$36,000 to child B, and you're good to go. You use
And if they're
unified
married,
exclusion.
they can do $72,000 per couple.
Right. So that's all in there. And by the way, if you have any questions on that, you can give us a call too. Why don't we go quickly to Jim in Tonawanda? Hi, Jim.
Hey, I'm at FinCEN 114. If you checked on 2023 tax return that you had over 10,000, you have until April of next year to file that FinCEN.
You have to April 30th of this year. It goes by there. It's asking you if you have stuff of in 2023. Do you have more than $10,000?
Hello?
Sitting in the bank. So now they gave you to April 30th to get that in there instead of April 15th.
Okay.
I was just on an hour ago with
Hey, thanks for
Thank
calling.
you.
All right.
Thank you.
Zach,
I'm Esther
so it should
Gullius,
be
the
fine.
tax lady from EG Tax. From our branch offices will be closing Monday night, and so everything happens here at 1890 Colvin going forward, right?
Yep.
And that would mean letters from the IRS, letters from New York State, shorted refunds, IRS audits, New York State audits, anything tax related. If you haven't filed your return, we can do multiple years at one sitting. But the most important thing is before Monday night, you make a decision. You going to file your return, or you're not going to file your return. If you don't file your return or you don't do an extension, then you're up for some potential penalties. By the way, you can also ask to have penalties waived if this is the first time you ever had a penalty and you have a good reason. Right, Chris?
Right, not just, I don't care. You know, if I'm late or not, that's not a good reason. You were in the hospital. You know, a parent just died. So, you know, something like that.
Something traumatic.
Yes.
Right? And earth-shattering. So, and again, our website is egtax.com. We will help you with the extensions. We'll help you with federal and state, and was a great tax season.
And I'm going to do a proud dad moment. Anybody out there in Western New York who has people running in the Boston Marathon on Monday?
Can you hear me right now? Just check 1 2.
Root them on. Congratulations to them. It's a lot of hard work.
I know Clean Feed was fine today because
my
I had
daughter
2
is
hours
one
of Tea Green.
And I know there's other
a
people
half hour with Zach,
from
so
this area
whatever
running
I
in
was
it
on
too.
before,
So
I think it was
kudos to
fine.
them as well.
I'll tell you, when I think of running 26 miles, I couldn't walk 26 miles. But running 26 miles, you know.
Well, that's what we
she's
do every
really-
tax
she's
season.
I think
really,
it's just I just need to hear the station. I think that's the only thing.
Gifted athlete, Grace
Yes.
Fabian.
Let me make sure.
And Grace, and Grace is a lovely girl too. I mean, you just can't.
Everything's good
she's
here.
a
Just making sure
lovely
my
girl.
return
Well,
is
anyway,
up. It
I'm
is.
Esther Golias, the tax lady from EG Tax. We're gonna sign off.
It was
for
working
this tax
like 2 minutes
season.
ago,
We'll be
TJ,
back
so I don't know
next
what
week
happened.
With Tiffany Fabian as well. Thanks for listening. For all of you who have been our loyal clients, we just appreciate you so much. So have a great weekend, right? And if you need us, we'll see you on Monday. Bye bye.